Holy guacamole, stocks keep dropping. This is a fifth consecutive red day in the stock market. So what is really happening? What should we expect for this week? Hello everyone, welcome back to our channel. Today we're going to talk about the current situation in the stock market, what we should expect, and what am I doing this week with my investments. But before starting, please smash that like button and subscribe since it really helps the channel out. Now, it is not a secret that interest rates will start going up, and I have to say that I believed that that was already priced in stocks, but we can see that after rapidly rising interest rates, stock gave a choppy start to the new year. Started with Federal Reserve putting wheels in motion for balance sheet reduction last week, as after the Fed's meeting in December, we were all expecting them to start raising interest rates in March, meaning that the balance sheet reduction could start before summer. Basically, what the Fed did during the pandemic was to increase their balance sheet by buying more assets such as bonds, but now that they want to raise interest rates, inflation is high, and all that is currently happening, they need to reduce it by basically letting maturing securities run off the balance sheet without replacing them, which is something we have seen before about 4 years ago, if I'm not mistaken, 2017, 2018. This week we have key inflation reports as inflation and the Fed continue to be the theme this week. Analysts do think it is going to be a good quarter and a good year for earnings, which is why they are generally upbeat on the prospect for earnings, and obviously good earnings could bring a little positivism to the market. But the market will be focusing on Jerome Powell's meeting tomorrow, Tuesday, at his nomination hearing, and the consumer price index on Wednesday, plus the producer price index on Thursday, which right now it is causing a lot of uncertainty as a lot of important reports and meetings will occur in the coming days, and you guys know that the market does not like uncertainty at all, even more now with everything going around with interest rates. But still, I do believe that markets could get a little more affected with the Fed scaring markets with a triple threat of policy tightening, as investors have been preparing for the Fed to start hiking interest rates. They also know the central bank is cutting the amount of bonds it buys each month. On top of that, they figured eventually the tapering would lead to a reduction in a nearly $9 trillion in assets the Fed is holding. What investors did not expect was all three things to happen at the same time, which obviously scare investors, as it sounds like the Fed is basically going to come fast and furious and take liquidity out of the market. If they do it in a steady and gradual manner, the market can perform well in that environment. If they come fast and furious, then it's going to be a different story. More of what we have seen so far this year in 2022, but the truth is that we actually don't know how they will act and perform in 2022, as so far have shown us lower return and higher risk, which concern many, as we know that raising interest rates will cause way more of this. Investors will continue watching yields as well as tech and growth stocks, and are the most sensitive to raising rates because investors pay for the promise of future earnings with these companies. Higher interest rates mean the cost of money increases, and that changes the calculations on our investments and possible returns, as companies' earnings will get really affected. Their cash flows of fast-growing tech companies will get really affected, and most likely affecting their performance in the short term and the stock price in the short term as well. We do have to take in consideration that this is going to be short-term effect, a short-term headache in my opinion, because remember that 1 year is short-term, so we can have a bad year in the stock market and it still will be short-term, while we expect in the long term everything to be back to normal. The question is, who or which company will survive this short-term uncertainty or effect in the stock market? Because let me tell you that growth stocks have crashed the whole 2021 and we expect them to recover in 2022, while maybe large tech stocks stabilize or drop a little bit to have a more balanced market. But with all this that has happened in the first 10 days of January, it creates a lot of uncertainty, making people wonder or doubt if we will ever see growth stocks recovering like expected. On the other hand, we see Jamie Dimon see the best economic growth in decades, more than 4 Fed rate hikes this year. He believes that we will see the best growth we have ever had this year, maybe since the Great Depression, as he believes that growth will come even as the Fed raises interest rates, possibly more than investors expect, meaning that this fear that we are seeing in the market right now might be over because of a nice growth in the economy during 2022, a growth bigger or larger than expected, while they are expecting the market to have a lot of volatility as rates go up and people update their projections. We are starting to see more and more drops in the stock market as well, as we can see that the S&P 500 is down 3.40% right now, the Nasdaq 10.19%, and the Dow Jones 2.11% since its peak. The Nasdaq is the one getting most affected, as we can see tech stocks are down today as well. Apple is down 6% in the past days, Microsoft 8.89% and more. But then we see stocks like Adobe that I have been wanting to buy forever, and it is actually up 2% today. But this week we are going to start seeing earnings report, mainly bank stocks, which it is definitely interesting to always see and analyze. This will show us basically the financial health at the moment and also show us how the economy is doing money-wise, loans, spending, and all that. Today, we saw Tilray in the morning, which you know that I don't invest in that company, but I do invest in the industry. So it is always good to see how companies within the industry are doing. We also have Delta on Thursday, which will be interesting analyzing it. As you guys know, that airlines earnings are really the ones that resemble the state of the overall economy. If airlines are generating higher revenues, it might mean that the economy is strong and people chose to travel more. Then we have JP Morgan, Citibank, and Wells Fargo, 3 of the biggest banks in the US, reporting earnings before the market opens on Friday. For people interested in the used and new car industry, we can see that new and used car prices keep climbing and don't expect a relief anytime soon. An estimated 89% of auto shoppers are paying more than sticker price or within 5% of it, which obviously is insane and a huge cause of shortage. This obviously is a big problem for people that want to buy a new car, as they might be overpaying for it, but it is excellent news for anyone selling the car. I do have to say that I'm very interested in Shift Technologies earnings because of this, because their growth is impressive and analysts are expecting a growth of 219.90% for 2021 and 69.80% for this year 2022, which obviously looks incredible. Yet the stock is down a lot this year, as it is a non-profitable, high-growth, small-cap company that it is heavily shorted at the moment. With all that said, basically the market does not know right now how aggressive the Fed will be reducing their balance sheet. We don't know how fast interest rates will go up, how fast it will affect companies, what Jerome Powell will say tomorrow, and more. But right now, I'm not selling anything, as in my opinion, it is not a good time to sell anything. I'm buying or adding to my positions or holding the ones that I don't want to add more as they continue dropping. I have been adding every day I see opportunity, every day I have money, and every day it drops if I'm able to do so. And I have added to both small and large cap stocks to the one that are at a good price. Obviously not Apple or Microsoft, but something like Facebook or Google, and all of the growth stocks as well that are down big. Now, when are we going to see the market stop going down and finally recovering? Don't really know. Impossible to know, but have to say that I do expect it to recover faster after all that interest rates, balance sheet, tapering, inflation ends this year, as we expect this year to be very volatile because of all that. But I would really like to know what you are doing with your investments right now. Let me know in the comment section below which stocks are you buying or not, or which earnings are you really interested in this quarter. Thank you and see you next time.